Rick, you look at Fed futures and the market has turned pretty drastically in terms of where they see Fed rate cuts for the end of the year, now pricing in at least 3 through December. Do you think that makes sense given where we are right now, or would you look to fade that move?
So I think markets tend to overshoot and markets move with momentum. I think it's hard to fade it today because the data we're going to get, we'll see. We think the inflation report this week, you probably get a decent inflation report. So there's a time when you go to fade it and time you maybe ride it a little bit, let the markets do what they're going to do. Do I think the Fed's going to cut 3 times this year? I don't. But you got to you certainly have to give it a little bit of patience and some time. The inflation data still is too high. I mean, as long as, and it was interesting to hear Chair Powell speak last week, he says the economy's in fine shape. The economy generally is in fine shape. Inflation's still too high. So, do you get a window to try and reduce? I think they'll get that window. But 3 cuts is pricing in a lot today. But I think you got to leave it alone for a little bit and let rates do what they're going to do.
Yeah, 3 cuts definitely looks aggressive relative to where we were just a week or 2 ago. And when it comes to inflation, we'll get another update in the form of CPI on Wednesday. And it feels like investors right now, Rick, are trying to decide whether they're more worried about growth or whether they're more worried about the inflationary backdrop. So I'll flip that question to you. What do you think the biggest risk is at this point? That we do get some sort of growth scare, or that maybe inflation stays sticky and the Fed isn't able to cut?
I think by the way, it was interesting when you start talking about Redfin because I was going through equities this weekend and a lot of Red's financials and I was pretty blown away by last week how much you had this rally around the deregulation of the banking industry and financials, and all of a sudden last week it was pretty pernicious. Listen, I think what that clearly suggests is the economy is a bit slower, and as you said, both the president and Secretary Bessent saying, listen, we got to go through a bit of an adjustment period, and the financials came under tremendous pressure as a result of that. So to me, it is definitely growth today. From what looked to be some pretty strong growth, all of a sudden some of the data is changing. So I think that's the big change in terms of what happened the last couple of weeks for sure.
I was reading Mohamed El-Erian's column on Bloomberg this morning, Rick, and he says that the Fed should at least consider letting its inflation target float higher. Unlikely, of course, that they will, but they don't seem to care too much about actually 2%. Aren't they fine with 2.5, 3? I mean, can't they cut if we're at those levels?
So I think listen, I don't think they'll ever tangibly change what their target is. I don't think they'll ever explicitly suggest a different target. But I think what Mohamed was suggesting is in the interim, can you absorb 2.5 to 3, particularly if labor starts to deteriorate? I mean, the employment number on Friday was okay, a little bit softer, but you got to watch some of these metrics in terms of, we're going to get a JOLTS report I think will be interesting. You're starting to see some softness show up in some of the areas of the employment market. If labor starts to come off significantly, and I've been studying these immigration numbers, that is quite different than we hired, over the last 3 years, a couple of million or so people through immigration. That number is coming pretty close to zero. And so, gosh, if you start to see some softness in labor, Matt, as you described, I think if you were running 2.5-ish, 3, 3's a tough one, but if you're running 2.5 to maybe a little bit higher than that, and employment starts to soften, then they still can cut. But I think they want to wait before they do it, and that's why I think you got to see some more data.